is closed on the 31st of August, 2023. As always, we'll begin with our disclaimer. We'll go over our calls and make some predictions. It's my trading plan for the 1st of September, 2023. Remember, it's a plan. I can change it. I can be wrong. Also, remember, I'm not playing with all my cards. I have personal business for the next few weeks. Look for the pattern with the early high, which is this, and tomorrow should be the pattern with the early low. We had an optional target 45.1939. We said became close enough here, but that still should print, even though it didn't have to, and it did. Resistance right at that number. We also said this trend line had been hit so many times that it should be just a matter of time until that line breaks. And the general idea was we were going to complete wave 5 and then have a reversal. I was counting this as wave 5, but because of the fib ratios, I now think that wave 5 is 1, 2, 3, 4, 5 here, but of course, neither count breaks any rules. We gapped up, hit a new high, closed under multiple prior highs, and if that's maintained at the open, by trading lower by 1 cent under the close, that's pretty negative stuff. Doesn't have to be maintained. We won't know that till the open. During the day, MEJT called for higher prices. Here's the buy signal. That's not enough to satisfy the target, but that is. There's a wall into the close. Tends to be panic selling by retail customers. They don't have to be wrong. Maybe they read the pattern the same way I did. But when I see panic selling like this into the close, it's at least a possibility it's a false move and that we gap up. And if we do gap up and we don't trade under this close by 1 cent, all that negative stuff I was talking about goes away. Well, here's the idea. I want there to be a 3-wave structure since I can't count this rally as a 5. At some point, this move up should complete, and then we have a move down. So today's a possibility. There is a count now. I just moved A over to here, from here to here, and you cannot count this as ABC. You can count this as ABC. C is equal to A still. And if you count the 5 waves as the way I just said, 1, 2, 3, 4, 5, that's 4 and that's 5. And then you'll see how wave A and wave C have this beautiful 1.618 to 1 relationship. And if that's right, then that's the end of wave B. And wave C, ideally, should have some kind of Fibonacci relationship with wave A, and that gives us multiple targets. Of course, if we gap up here and take this out, the whole thing falls apart. But for right now, there's a possible end, and we have possible targets on the downside. And if you look at this on a 5-minute chart, it's easier to see these 5 waves up. Doesn't mean it's the right count, but at least everything fits if we continue down. And as we said, this reversal to negative territory after hitting a new high is negative stuff. When you break this rally with upsloping handle, the target's to retrace the whole rally around, where is this low? Somewhere around 44, it's under 44.20. And we have a target rate of 44.22. Doesn't mean it has to stop there. Nothing says it can't go any lower. But even if that works, that's still over 80 points. Now, Friday's pattern has the early low. Doesn't mean you won't give up. Jobs report comes out before tomorrow's open. It can influence prices in a way I can't predict with a sufficient degree of accuracy. Don't forget, we had that wall into the close. A lot of times those will gap up and you won't get the confirmation. But that being said, we gapped up at a new recovery high, we then closed under multiple prior highs. In addition, we broke a trend line in the pattern, which targets a retrace of the last leg higher. So if confirmed at tomorrow's open, if we do trade lower tomorrow's open, lower than today's close, it should lead to lower prices, even if we don't close lower tomorrow. Don't forget that wall into the close makes gapping impossible, and we're not going to know that until the open. Despite the wave count and the break of the trend line, I'd be leery of short positions here. Retail customers had a very large drawdown on money market funds at Ridex. Ridex got bought out by someone else. I still call it Ridex. Forgot who bought them. But then not only did they draw down lots of money in money market funds, there was a huge increase in bear market fund assets, even though this week rallied. So it means that the public is aware of the fact that September is the market's worst month, and they're loading up on short positions even though we rallied. And such one-sided pessimism deserves to be punished, and punished in grand style, even if the punishment doesn't come immediately. Doesn't mean we have to rally tomorrow, but it's a fairly reliable sign that before long, much higher prices should be coming. If we get the confirmation, I can make the case we're going to drop at least into the 44.20s and maybe even lower than that. But I would not bet the house on a drop here when the sentiment indicators are that lopsided, because at some point, I think any drop we have is going to surprise everybody and rally in grand style. And I don't think we're going to have to wait very long, even if we drop first. It's the pattern with the early low, and that's today's call.